The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 13th, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary afternoon, an extraordinary evening. If you're on the West Coast, have an extraordinary morning as well. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, when we make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, we'll go look at the circumstances that the Bulls and the Bears are throwing out to you and I. I'm absolutely honored by your presence here, and I'm here to serve you. So feel free to pick up that phone. Dial in at 877-927-6648. Internationally, you can call us at 727-445-1044. This is terrific Thursday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 69 points, trading at 17,471. S&P's up about 7, trading at 2,093. NASDAQ Composite up 27 points at 5,071. Russell's up 4 points at 1,213. The DAX closed out the session, finishing up 90 points at 11,014. The FTSE was down 3 points, so a flat day out there. Gold's trading back $8 right now at 11.15. Silver's off a nickel at 15.42. Light sweet crude back a buck and change, trading out at 42.17. Moving to the upside, you've got the auto parts retailers really taking off here today. You've got AutoZone up $26. That's about 3.5%. Advanced Auto Parts up 10%. 17 buckaroonies out there. O'Reilly Automotive up about $8.50. Also moving to the upside, Lending Tree, Monster Beverage. To the downside, Intercept Pharmaceuticals. That's off 7%, down $16. Copa Holdings off $9, down 13%. NetEase off 6%. That's down about $8.50. Eagle Pharmaceuticals off 6. Shake Shack is trading out at $58.93. That's off about 9%. So a much more calm day than the last few out here. So we'll just simply be calm about what it is that we're going to review. But let's get a feel for where we're at in the markets. I think the easiest place for us to start here is I'm going to switch over. Well, I'm going to switch over to a 300-minute time frame chart. We're going to take a look at the 4 different futures contracts, just to get a feel for really where we're at this moment. Now, what this shows you, if you're watching us on TigerTV, thank you so much. If you're listening on TFNN.MLBI or radio station, you remember you can always catch the archive of this show on channel. And of course, you can watch it live on your mobile device out there. And of course, if you're watching it on eSignal, that's a wonderful thing. Now, inside the ES Mini right now, it's trading out at 2,088. Somewhere right around the 2,095 area. And what I'll say is we'll probably see a spike of 2,099 and a quarter. But right around that we'll call 2,096 to 2,099, 2,100. Right around there is likely the next target for the ES Mini. I'm not saying it's going to get up there today. Maybe it's tonight. Maybe it's in the morning. Maybe it's tomorrow. Maybe it is this afternoon. But it's at that level where we see really, I'm only showing you the diagonal resistance, but there's also horizontal resistance at that level. In fact, there's quite a bit of horizontal chop around there at that level. You can see here just with regard to the highs. I mean, if I just simply drew a trend line, and we just use the bodies of the candles, you can see that's right around the 2103 type area. If we see price move above that, again, not today, then that will tell you that you've seen what we'll call a slight breakout inside of the S&P futures contract. Now, I say slight because if you're at 2103 or so, if we just simply take a look at retracements from high to low, what you will also see is at the 0.786 area, That's 2109 is the price point. If it can clear this 209, 5-ish, 96-ish, 99-ish, it's going to run up to 2109. And if it can move above that, then you start getting back into the swing point high from back around with July the 20th out there. However, it's got to be able to clear that. That is has been a stiff resistance area inside of the ES Mini. If it can't, then you'll see some type of retracement or even move all the way back down to the bottom of the channel line. That's what's going on the 300-minute. Now, if I switched over to the 30-minute chart for you, what we can do is we can take a look at this little, what we'll call it a subcorrection price channel at the moment. We'll call it a little rising channel line out here where price is traveling in. At this stage of the game, that's my best estimate based on, this is really based on activity this morning as price had moved a little bit lower, working off all that hard work from yesterday. And as long as price holds the rising price channel line out there, things are pretty cool. You can see the diagonal from the yellow line. We're looking at a 300-minute chart earlier. This is now a 30-minute. We've just simply jumped to the downside. Now, let's do the same thing here for the NASDAQ. The NASDAQ was the one that worked extra hard yesterday at going ahead and moving the markets to the upside. And if we take a look at, let's go to the 300-minute chart first. Let's do this in order. It's going to make it a little bit easier. So inside of the NASDAQ, the NQ, let me go ahead and pull this back just a tad there. There we go. That's its descending price channel. We can see price has not broken out of that. That's very likely its next target area, priced out right around the 45.79. We'll just use the swing point out here from about 3 o'clock or so on August the 10th. And that's priced at 45.85. That's where price is headed to. If price can clear that, it's got a few hurdles out here. It's got this hurdle from the swing point on August the 5th out here at a price point of about 46.29. And then if it can clear that area, then, hey, it's all the way back up to the highs. But it's got to be able to clear that area. You can switch down to a 30-minute chart as well. We can take a look at that subcorrection price channel. That's all we can call it at this stage of the game. You can see how price is traveling. And as long as it doesn't take out to the downside. Now, the problem becomes from 6 o'clock on, and it's a 30-minute chart. If the markets aren't really moving higher, this thing could obviously just travel sideways and maybe move outside of this rising price channel. So we're using that more so from a today standpoint for the next couple of hours out here. If we go take a look at the Dow futures, let's switch back over to a 300-minute chart for you so you can get a bigger view and a bigger picture of that. We can see all of these. Now, the Dow obviously weaker than the NQ and the ES, but it too is rising up to the occasion of trying to get and test its descending price channel. Perhaps the Dow, since it has worked so hard to the downside, will be the one that would give you and I the biggest indication as to what these markets want to do over the course of the next couple of weeks out here. Through the end of the month or towards the end of the month. If the Dow breaks above this, and when I say this, I'm probably talking 17, 450, 60, 70, somewhere right around there. What you'll see is a move up to the swing point from August 10th, right around the 17,570 area. But if it does that, it will have broken that strong descending price channel that's been in play ever since the tops out here back on July the 20th. Same deal with regard to subcorrection channel. We don't need to go into that. Let's just take a look and finish this up. Look at the Russell. Now, the Russell 2000, don't forget I have a 10-minute delay on this. And as we take a look at it, it's really doing the same thing. It, too, is going to have to work doubly hard to prove that there's going to be a breakout. So it looks to me like the Dow would be the first one up. Maybe it's a toss-up between the Dow and the NQ. But it is from those channel lines, those trend lines, and I'm using the 300-minute chart for a reason. And that reason is because it was on the 300-minute chart that really gave us our best signal yesterday of a bottom. So why it would make sense to go ahead and use that, continue to use that. If we take a look at the pattern in play out here, and we took a look at this yesterday, and that's where we have price moving lower with less relative weakness out here. Hence, you got the little diagonal line. It was doing that. We know that we had a hammer candle that had formed back at about 9 o'clock. Again, a 5-hour chart that we're looking at. So you have a nice little hammer candle. That says that the price is trying to hammer out a low. And then that level was tested and it held. Price is above above the market profile, TAS market profile resistance level, 45.29 is where that is priced at. So long as price holds that, that's also, we'll call it somewhat bullish, or at least suggesting a move up to the top of that descending price channel out there. So it really is from the 300-minute charts, and we saw the same type of pattern inside of the Dow futures as well. I think we covered that yesterday, but I'll just pop that up on my screen out here. And as we take a look at, same kind of a deal where it was moving lower on less relative weakness at 2 p.m. As we were coming off the air, we had a nice little hammer candle that formed down there. Price continued to move higher. Now we can see at the 17,468 level, that's a TAS market profile resistance. We haven't seen a close above resistance since the trading day of July 31st. So any close above 17,468 would also give you and I a suggestion that the trend of the downside has completed. And, you know, as far as where this market grinds its way for the next couple of weeks, no telling at this stage of the game, but that is what it wants to do. So hopefully that assists you in your trading. Now, let's go take a look at a little bit bigger picture here, and let's go see what's going on inside the summation index, inside the price oscillators for our three friends out here. The New York Stock Exchange, she is over on the left-hand side. Dead smack center is the NASDAQ Composite, and off to the right is our Dow. If we take a look at the Dow right now, as of 117, we are seeing that the price oscillator is above zero. So yesterday in the Dow, we had a hammer candle. Looks like a hammer candle, pretty close to a hammer candle. Today you're getting some additional follow through. Likely targets on the cash index out here, probably the 200-day exponential moving average right now, about 17,820 or so. That's likely the target. Will it be able to get above that? I don't know. If it does, it's going to be the descending trend line out there that'll become the target out here. As long as the Dow can finish off the day somewhere around here with the type of net advancing issues that it has, that becomes bullish. That will have set up a little complex structure out there, saying that the bulls were really the ones that were in control of the market. I know it's hard for people to buy off on, but like you got to call them like you see them out here, and that's how I see them. If we take a look at the New York Stock Exchange, that's the one that's been giving us the strongest signal that this market was not ready to crater to the downside because its price oscillator has been above zero really for the last, 4 trading sessions out here. We only saw it move down one trading session, really been above it since the trading day of July 29, with only one day down below deck, and that was on August 7th, and it gave it up right away. That's referred to as a simple structure out there, and that says it is the bulls that are in charge, and that's of the wider swath of the market. NASDAQ Composite, still in negative territory. We take a look at its price oscillator. It needs some more net advancing issues in order to be able to turn that to the upside. If it does, then we have symmetry across the board in all three of those indices, suggesting higher price out there. We get back from this first break, had a request to go take a look at a Wisdom Tree ETF. It is the WTE, what is it? HEDZ is the ticker symbol, the Wisdom Tree Europe Hedged Equity Index. We'll go take a look at that as soon as we return. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We'll check in real quickly here. I've got the 120-minute time frame chart up for the S&P futures, and you can see, if you watch us on Tiger TV, you're seeing these horizontal bars going across my screen out here. Those are the primary trading ranges, the horizontal trading range boundary lines on the 120-minute time frame out here, and you can see that price right now trading out at 2088. At 2088, in fact, 2088.25, if we're going to be exact, price has stalled here 52 times in the last 1,600 bars, give or take just a hair out here. So price is up right now against a very formidable level of resistance. That doesn't mean it can't spike up above it and close right back on it. But what it does say to you is it does say that, look, if price closes above this, I'm not talking 28.50, 208.850. But if it can really close above with conviction, just like the last time that it did back on the trading day of August 10th, it'll run up to the next level. These are, if you were taking a look at a building and you were wondering on your screen where the floors are in this building, well, here it is just really spread out on the chart. And so you just simply go from one floor, you go up to the next, you stop, you go up to the next, and they act as areas of support and resistance. Likewise, getting above 2088.25, price then could come back and find some support there. So there's another tool that gets you up into that 2101 level, as long as it can clear this area right here. Now, let's go take a look at the Wisdom Tree Hedge Equity Index. The ticker symbol here is HEDJ out here, and had a request to go take a look at it. Now, I have not traded this vehicle before. In fact, I'm going to put a number of different. What I did, though, this is for a client, and let me go ahead and edit the chart. And so what I did was try to first I familiarized myself with the ETF itself, just simply so that I could provide some good information, or want to provide good information. And the first thing that I did, as you should when you're trading any ETF, is to first figure out what's inside it. And you can get all the information that you want on the internet. And then if you go over to the Wisdom Tree website here, you can click on the ETF. You can find it, and it's very helpful because this says it's the Wisdom Tree Europe Hedge Equity Index is designed to provide exposure to European equities while at the same time neutralizing exposure to fluctuations between the euro and the U.S. dollar. So it tells us a lot. It may sound confusing, but what it tells us is that, hey, this is based on, how these equities are trading over in Europe out here. And in fact, what's cool is it's got all the components, or it has most of the components. If we take a look at the individual stocks that make up this, it's like trading the XLE or the XLF. You want to do the same thing because the top 10 stocks in here, Telefonica, InBev, Banco Santander, Siemens, Unilever, Daimler, Chrysler, Bayer. The top 10 stocks represent about 47% of the weighting in here. But what that also means is that you should be taking a look at those top 10 stocks, and you should be looking at it on their exchange in order to really get a feel for what's going on. But always familiarize yourself with what it is that is the underlying instrument in which you trade. I've shared with you folks a number of times. A lot of people like to trade the volatility index ETFs and ETNs that are out there, but most didn't realize that it really was. Then everybody thought that, hey, it's going to be based on the cash index out there, and nothing could be further than the truth. It's from the two nearest futures contracts that are out there. So you've got to take a look at what's going on with the futures contract, not what's going on with the cash fix. Now, as we take a look at this chart right here, we're going to spend a little time when we come back from the next break as well. I can see I've been a little bit long-winded about it. You see all these gaps out here and so forth. So when I first popped it up on my screen, not knowing anything about it, I did see the symbol. I saw those gaps. Well, all those gaps out there, because it's being traded overseas, two, because you've got the currency conversion issue. So with regard to what we take a look at on here, you and I are just simply going to ignore gaps. We're going to say that the gaps that are on this chart here don't help us to identify anything. A little different if we were trading an individual stock like Google, like IBM, like Apple, anything out there. Their gaps are really our friends. Here, gaps are nothing more than just noise and a little bit of a nuisance. Now, what can we do to take a look at this chart? The first thing that I did was take a look at the channel lines. I wanted to see how has this thing been trading. So just like you and I were looking at on a 300-minute time frame chart out here, here is the channel line for the Wisdom Tree Europe Hedged Equity Index ETF. We can see that price has been traveling in a relatively nice rising price channel. That says, if this goes ahead and it breaks through about the $59 area, could spell trouble in paradise. We come back, let's continue looking at HEDJ. And anything else that you'd like, you just have to pick up that phone, dial on it at 877-927-6648. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. We're looking at the Dow's up 67, S&P is up 5, and we're taking a look at the Wisdom Tree Europe Hedge Equity Index ETF out here, HEDZ. So we established that it's in a nice little rising price channel. Price breaks through that. That starts to spell potential trouble in paradise. Well, we can also take a look at. We'll take a look at one of my favorite indicators. We took a look at that earlier with regard to identifying the bottom yesterday in the market, and that's our relative strength indicator. We can see that the last top that was formed out here, just the opposite of what we looked at yesterday. Here's the daily chart pattern out here. We see that price had rose up to a high on April 13th, right around 68.72, and it was doing it on less relative strength out there. Never a good thing. That can go on for a while. You really need to understand your reversal candle signals out there in order to be able to put that plan together. Otherwise, don't trade with it because you'll just simply get in trouble out there. We don't see any kind of issue issues or divergence at the bottom, but that's one tool that this trader will want to go ahead and have on their system out here. If we take a look at just simply volume type of analytics, there wasn't a whole lot of liquidity in this back in the early part of September, so it's somewhat hard to truly gauge out there. So we're going to turn volume off on this as we speak right now and say it's good, it's okay, it's good, but let's take a look at some moving averages out here. Here, the first one that we'll put up on our screen is the 19-day exponential moving average. That's the green line that is on my screen out here. Now, moving averages in a trending market are wonderful. In a sideways, choppy consolidation market, they're horrible out there if you were going to use those as signals for getting in and getting out of a market. This thing has had several decent trends out here. I always like to apply a little bit longer term moving average as well, and that is the 39-day exponential moving average. When you get a crossover there, that is at least a short-term bullish or bearish, depending on which way you have the cross. An example of that back here in January of 2015, as this thing rode its way up into that price relative strength divergent top back on April the 13th out there. Well, as we fast forward and take a look at it, we've seen a little bit of choppy action in throughout here, which was April of 2015, through about the June-ish time frame area. But if we take a look at these two moving averages, we can see that they're kissing as we speak right now. We see where price had tried, or we see where the moving average had a crossover here a couple days ago, August the 3rd out there. No reason for this not to be able to, if the market rallies here for the next couple of weeks, no reason to not expect that this will do the same. The question is, do either of these moving averages act as resistance? So on a move higher, if one was looking to short this $62 vehicle, you'd be looking for price maybe to get up to about the $64 area out there. So, if and that's really the best tools that I've been able to find to help identify what's going on. And if you put them all back up on our screen out here, you've got that rising price channel, you've got your relative strength indicator over a 14 period of time, and those two moving averages to assist you in navigating through a trade in HEDZ. Hopefully that helps you with anything it is that you guys and gals are taking a look at. Now, let's go back and take a look at what's going on in the market. So we know we're at the ES Mini up against that strong resistance area. So that's helpful. If we take a look at, let's go look at the ETF structures out here. Let's go take a look at the Qs. We'll start off there, QQQ ETF series. I think I've got a better page. Yeah, let's do this. Let's switch over here. Here we can take a look at a number of different things that I've got. I've got my profiles out here, my market profiles. TAS market profiles, of course. And we have both the daily and the weekly. We know that yesterday price came down into the area where it had broken out of. It was trying to get down to that swing point from the trading session of July 7th. That had 44 million shares. You were down there with pretty good volume yesterday. 40, how much volume? 42 million shares yesterday. Price right now running into a bit of resistance at the point of control on the weekly chart out here. An area where for a while, the last 4 weeks, price has been fairly comfortable in trading. That's at a price point of 104.59. I'm sorry, the center of, 104.59. Is that right? At the center? Yeah, it says 104.59. You're trading at 110. Doesn't even make sense when I take a look at it. Hey, nonetheless, out here, price is likely to get up to the 112 area, 112.06 to be exact, but more likely where the Qs are likely headed to is the gap down from the trading day of July 22nd. So in order for that to occur, we're going to have to see that breakout of that descending price channel inside those 300-minute charts. Assuming that takes place, we're going to go both sides of the trade here. If in fact that takes place, then we ought to see the Qs move up to that level. If it can't take out that descending price channel, we're going to see some kind of retracement, maybe even a move back to test out the 108.07 area out there. So a lot is at stake with regard to continued move higher in price and those descending price channels out there. If we look at the Russell 2000, of course, this is a descending price channel on its chart out here on a daily time frame. That says that resistance, if this can continue to move higher. Now, the IWM was the one that tested and rejected a swing point on lighter volume yesterday. That is the July 28th area that had 53 million shares. We may have seen three tests. What do we get down to today? 1939. Missed it by a nickel out there. And I'm looking at the low from the trading day of July 28th. We saw one test. The first test was out here on August 7th. That was 42 million shares. Yesterday was 46 million shares. Again, light volume tests and rejections. Now, in order for the IWM to get any kind of giddy up and go, what it needs to do is clear the top of that trading session from July 28th. As long as it trades in that candle session, it's not telling you anything. It's telling you, hey, I can go back down and test 119.34. Almost did that this morning. Price is, though, today up above its daily market profile low. So that is at least a promising. It offers some promise that price will get up and test the descending price channel on the daily chart for the IWM. In the case of the SPYs yesterday, the SPYs getting down, testing and rejecting the swing point from July 7th. That had 173 million shares. Yesterday was a test of that area with 172. So very similar volume out here. In the case of the SPY, it's got its own little cone of silence out here. Maybe the maximum opportunity potential inside the SPY. The first place is going to be the top of that descending price channel. And the SPY that's going to be right around the 210.50 area is what we'll call your 209.33 out there. If it can break above that, that gives you the promise of maybe getting all the way back up to those highs in the 213 type area. If it can't, and it can't break above that descending channel line, trend line out there, you probably come down and you test the bottom. And it says we go into this little cone of silence up until about the end of August or so out here. Today is August the 13th. So maybe a bit of slim pickings, slow going for a while out here, and if so, we'll just simply deal with it one day at a time. Now, in the case of the Dow Diamonds, we know the Dow Diamonds, they have been struggling there. The Dow, we took a look at that. But the Dow Diamonds yesterday came back and tested the swing point from the day of February 2nd. That had 9.4 million shares, and yesterday was a test with 8.8 million shares. Remember, at about this time here, we were doing some straight line math, trying to estimate what type of volume we'd see at the end of the trading day, because we knew that there were certain areas that were being tested, and the question was, were we going to reject them on light volume? In the case of the Dow Diamonds, it was an absolute rejection on light volume of a fairly critical swing point out there. What does that say? That says in the case of the Dow Diamonds, we should anticipate it getting up to about 176 and change out there, maybe 176.70, somewhere right around there. Of course, the real key is going to come in that break of that 300-minute chart. At least I believe that it's going to come from that, as well as whatever that signal is from the summation index by the end of the day. You're just slightly below. You're just flirting with zero as we speak right now. Remember, the Dow and the NASDAQ composite have both been below zero for several days out here versus the New York Stock Exchange really being above zero. So we have a conundrum, if you will. And that conundrum is, which side is going to win out here? And I do not know the answer to that. We can take a look at some clues out here, like the VIX index, which is trading now back below the 50-day exponential moving average, as it did for the last. This has been tested. The VIX has been testing that 50-day line since August 6th, clearly since August 6th. It has not been able to bust through that. What does that mean to you? What it means to you and me is that there's plenty of liquidity in the marketplace. That's really how I like to take a look at that VIX index. You trade below it, markets move sideways to higher. You trade above it, markets start really trading to the downside. Now, that's a general statement out there, but it's a pretty good general statement for anticipating what's going on. And it doesn't really matter what price point the VIX is at. It doesn't matter whether it's trading at 50 or it's trading at 13 out there. So it's a great tool and a great line, something that you want to go ahead and put on your screen out there. As well, we know that another great tool for liquidity inside of the market is what's going on inside the euro-Japanese yen. If we take a look at that currency pair, what we know about it is it broke out above resistance. The resistance was that shooting star candle from July 13th out there. Not a lot of movement since then, but it has been in a uptrend out here. That is bullish for the market. Even when the market is going the opposite direction, it's saying, hello, somebody's knocking at your door, and that is Mr. and Mrs. Bull out there, and that ain't no bull. And in this case here, it is the currency pair that wins the directional the direction of the markets out here. Another reason why we're seeing what we're seeing. Now, the question is, it's changed direction. Is there enough wind at its back to go ahead and take it through that resistance line? I'm referring to that 300-minute time frame chart. We've already seen a break above resistance in the Euro-Japanese yen. As long as it can hold 137.79, it offers a promise of getting back up to the 141 area. That should be enough fuel to keep these markets motoring higher. If it takes that area out, and it can do it with conviction, then you're actually setting up an A to B equals CD to the upside inside that currency pair. We'll take this stuff one step at a time out there. If we look at maybe some longer term, a better idea of what's really going on inside the markets, we've taken a look at this chart out here, and that is the divergence that exists between the Dow Jones Transportation Index as well as the industrials. And what you and I know is that the topping structure, the projection for the next topping structure, if the past equals the future, is right here, the week that begins, in essence, August 31st out there. Now, I know I've given you a date of like August 25th. As to the potential next real top out there, right now, that's the guideline. That's what we're going with. We're going to go ahead and take a look at other tools as we approach that level. But that says that we've got, weekend, 5, 6, 7, 8, 9 trading sessions or so before we even get to that level. And if that level, we don't see any kind of reversal out here. That's as you move into about the time frame of about the middle to end of September out there. Now, this is showing a couple of trend lines. And so if we just take a look at where we're at on our trend lines out here, let's go ahead and put this chart on my screen. Let's this shows the S&P at the top, the Dow next, the next panel, composite, and then the New York Stock Exchange on the lower panel. Let me turn off some of these panels out here. We'll turn them back on one at a time. But let's start. Oh, that didn't work very well. Okay. I'll do it the old-fashioned way. Let me do it like this. Did that work? There we go. That's working. There we go. So we'll do this. We're going to take a look at the New York Stock Exchange because that's one that's really been under pressure. It's got the death cross going on out there. And it, quite frankly, what I think is more important than the death cross is the mere fact that it's trading right at or has broken that very important trend, coming from the October 3rd, 2011 area. So this is where another little conundrum, right? We're taking a look at the NYSE. What you and I know is that its summation index has been turned up all but one day out of the last, 5, 6, 7, 8 trading sessions out there. So it's a New York Stock Exchange that's actually been doing all of the heavy lifting out here. But it hasn't been able to do enough heavy lifting to really get above that trend line. Now, I may have it off just by a tad out here, but it's, either way, it's still it's still struggling out at this area. It really needs to get back above that. Otherwise, it's really going to be slim pickings, I think, over the course of the next week and a half or so out here. But it has broken that trend line. Now, it's a weekly chart out here. And we've seen really a couple of breaks over the course of the last month of this level out here. And what happens is when you break a trend line, what's likely to happen is price will fall to the next trend. And that's that I was trying to make this work for you. Let me pull this back a little bit further. This is a weekly chart that we're looking at. That happens to be the trend line coming off of the March 09 level, and the next touch point is October of 2001. So in this, and at 10, and this is where it's going to really be kind of interesting and dicey, because you see the New York Stock Exchange broke above its 2007 highs, which is 10,387. And this is suggesting to you and I it's going to violate that area and get back below it. And if it does, says price moves back to about the $9,700 area, actually gets back into the October lows, maybe even into the February lows of 2014 out there. But that's on the NYSE. If we go take a look at the Dow and see what it's doing out here, we'll go ahead and turn that trend line on, and we'll turn the one off for the NYSE. And when we get back from this break, let's go take a look at the Dow, because we can see that in its case here, it's traded right into it, and it's held. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We can see just how powerful that 2088 and a quarter level is inside the ES spinning, a really key level of support and or resistance. At this stage here, it's been resistance, so we'll want to watch that level throughout the day. Have a request to go take a look at Rand Gold Resources, ticker symbol out there, GOLD. So let's go take a look at it, what we know about it. Let's take a look here. Rand Gold Resources ran into resistance of its TAS market profile daily level. That price point was or is 65.65. Got up yesterday to a high of 65.43. Now, price here has broken down below support out there. Let's take a look at the volume. Try to maybe blow this up just a bit on my screen out here. That way it gives us a little bit better look. So we had volume to the upside yesterday of 1.3 million shares. You've been trading, we've got, 2 more hours left of trading. You've already done 618,000 shares. So it's going to be light volume on the pullback. The question is, where's it going to find support is really what's at stake here. You would have hoped that would have found support at the daily profile low. So that says it hasn't at this stage of the game. That was the open window out here. That was the open window, that yellow horizontal line on my screen, from the downdraft of July 20th, which had volume of 1.4 million shares. So you got up over yesterday with a little bit lighter volume. Will that area hold that support? Perhaps. Another area to look at would just be some normal, natural retracement levels. You can see it's done the 0.382 retracement, which was priced out at 61. The heck. 62.23. It's trading slightly below that. So this could easily, if you're looking for an area to enter this equity, 60.26. Might be a good spot if this pulls back on lighter volume. Remember, this is going to trade in the direction of Goldilocks, and gold is pulling back a bit out here. But Rand Gold breaking down below an important support level. Now, when I say it's broken down, it could always close today back above 62.71. That's what you would like to see inside that equity. If we go take a look at Gold Corp out here, 1440 is where it is trading at, down 85 cents. Volume is down 6.6 million shares. Yesterday was up with 15 million shares. This is behaving a little bit better, I guess, from a market profile standpoint, but it still is dealing with a little supply line from July 20th. There were 21 million shares on that downdraft. Price got back there yesterday with 15 million shares. Looks like there's some folks that were just glad to get their money back as it traded lower for quite a period of time out there. So that's what's going on inside of Gold Corp as well. Weak hands going to strong hands is perhaps what is happening out there. With a minute to go, let's go take a quick peek here at light sweet crude, see what it is doing out here. Light sweet crude looks like it is on its way back to about the 40.57 area, make a 1.618 expansion of its last set of swing points. Oh, to finish this off, let's go take a look at the at that trend line inside of the Dow. Now, the Dow is a weekly chart, and this is the first. Now, it has tested this trend line. Last time a test of that was the October lows out here. If it closes where it is about right now, it could even close just slightly. If it can close anywhere above, I don't have my window. Okay. If it can close above, we'll call it 17,370 or so, the trend line will remain intact for at least another week. But that says that the 200-day, in this case here it's a 40-week, 17,675 becomes a very key level of resistance for the Dow. Folks, stay tuned. Our man David White's going to be up next. Have a terrific Thursday. I'll see you on Fantastic, Fabuloso Friday. Have a great afternoon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.